For financial markets across the world, the defining characteristic of 2022 was the US Federal Reserve's decision to embark on the most aggressive monetary tightening cycle seen in around 40 years. With the US dollar consequently strengthening across the globe, emerging market currencies like the rupee face pressure. We have with us today Jamal Mecklai, the CEO of Mecklai Financial, to share his views on the movement of the rupee in the current year. Mr. Mecklai, a veteran in India's currency market and treasury risk management landscape, will take us through his expectations for the rupee amid an unprecedented global policy environment. Welcome to the show, Mr. Mecklai. The experience of 2022 shows us that it's risky to predict an end to the Fed's rate hike cycle. Of late, we've seen that likely support from the RBI has kept the rupee from reaching the 83 mark, even as US data suggests more Fed tightening. Where do you see the rupee over the next couple of months?
Babu, I always say I have no idea, right? I think fundamentally you need to look at, I mean, you've been talking, the Fed is the main game in town. I think people are finally beginning to believe globally that the Fed is not done tightening. It's going to continue to keep rates high. As a result, equity markets are very, very nervous. My personal belief is there is a bigger problem. The bigger problem is that, the Fed and recently the ECB repeated that they're going to do what it takes to bring inflation down to 2%. Now, I think that is the problem, because I think the 2% target was set on a different planet, right? It was set when globalization was smooth, when China was selling things as cheap as they could, and it was great work, I don't think we're certainly not in that world now. And so I don't think they're going to be able to get inflation down to 2%, right? They will get it down, if they continue to hold rates up. But to my mind, the terminal rate, the target needs to be different. Now, the big problem is if the Fed any day says, okay, I'm not going to take it to 2, I'm going to take it to 3.5, markets will lose their mind. So I think there is some major trauma to come out of that. Okay. Now, of course, we're in India, the rupee is what we're looking at. Now, whenever there is this kind of dramatic nervousness, risk off, etc., naturally people pull money out from everywhere, right? Including India. Plus, we have this continuing problem with our current account, right? Now, on the other side is the RBI, where at every meeting, Mr. Das says, we can manage it. And they are showing their muscle, more particularly recently. I mean, despite the whole Adani story, etc., it has not fallen below 83. In fact, it strengthened, 30, 40 paisa in the last couple of days. Now, it's dangerous to think that they can hold it, forever. On the other side, if you really look at purchasing power, I mean, the Economist had a thing saying the rupee is 40% undervalued. You look at anecdotal evidence, it's dramatically undervalued. So I think it's good that RBI is preventing it from weakening. How long will it be able to hold the tide? I don't know, And it's the other important thing to realize is that India, despite it all, we have our problems, but India is still a great place to invest. So I think what we're going to see, I read some numbers recently that suggested that FII flows and FDI flows were more or less on par. Used to be FDI was much, much lower, right? So maybe FDI is going to take over the running, and that may be what will keep the rupee sort of steady in that fashion. So where it's going to go, I have no clue. I mean, it's the 73, 83 appears to be a very strong support. But as you know, our business is really risk management. And I think the bigger issue right now facing corporates, particularly exporters, is the fact that the premiums have fallen very sharply, right? And I've just finished working on something. I'm very excited about it. You know, with premiums of 1 rupee 50 paisa for a year, it makes no sense to sell because 1 rupee 50 paisa could go in 4 or 5 days, right? By the same token, you can't sit danga, right?
Exactly.
So we've been working a lot, frankly, and I mean, this is the kind of stuff I enjoy. And we've come up with a model. I'm really, really, really proud of it, where at least certainly over the last 5, 6 years, if premiums had been at 2%, we would have been, I think, 1% better than the day one forward rate. I can't remember the exact numbers. So I'm saying that where the rupee is going, it's fun to discuss, chit chat, have a drink, because you can say anything. And there's so many forces to look at, right? You can look at inflation, you can look at the war, you can look at this, you can look at that. You don't know what's going to happen and what is going to be the impact. But what you really need to do is you need to look at what do I do, you know. So this, and what's interesting also is this was exporters I was talking about, right? Now let's talk about importers, right? Uh, Premiums have come down, right? So there are some professional companies that always hedge. So for them it's great; it's even cheaper. But if you really look deep into the market, you find that even though there are low premiums, there have been many occasions when the rupee strengthens a lot, right? So you're missing out a lot of opportunity. How much opportunity are you missing? I've calculated about 1.5%. Now, a lot of companies say, the hell with that, I don't want to fool around. Well, fine. But if you want to fool around, we figured out ways to try to capture some of that, not all of that. There's no magic wand. So that's the story from my desk.
Okay, so that's a very interesting point that you've made about the premiums. And we have, of course, witnessed a degree of volatility over the last few months. I think it was at an 11-year low sometime in October or September. And that's, of course, as the rate differential has narrowed. So, what should be the best strategy for importers and exporters at this point of time?
Well, as I said, we've developed this model, right, where we use uh, 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 we have three hedging strategies, right? One is our sort of, we've long had a program called the Mecklai Hedge Program. One is called a trailing risk limit, right? Where what you do is you set a risk limit, and if the market moves in your favor, you improve the risk limit. And the third is, of course, do nothing, right? And what we've created a toggle using, it's a little complicated for this kind of show, using momentum and using volatility. And based on that, you choose between these strategies, right? So it's a little complex, but it seems to work, or it has worked. And you never know what the future brings, but that's what we do. So, that's how we recommend people. We used to tell people, Baba, this program I said, MHP, we said, set it up and let it run. But now with the markets getting so volatile and premiums coming down, you can't afford to do that. You really have to be more engaged.
So you had touched upon the FPI flows, or basically the overseas flows. So we saw that 2022, it was a year of large FPI outflows from equities. And so far in 2023, it's been a little volatile. And we also know that India's GDP growth is expected to slow down, albeit less than many others. So what can we expect on the flows front?
Well, as I said, flows are going to be driven by, portfolio flows will be driven by risk on, risk off overseas. I think it's going to be risk on, for a long time globally. So obviously portfolio flows will not be that strong. However, I think India's GDP growth, I mean, these numbers, the reality is we've got a huge market, lots of opportunity. So I think FDI is going to be strong. Now, whether it will be able to increase faster than the drop in the portfolio flows, I don't know. But so it's going to be tricky. That's why we come back to the rupee. How well will RBI be able to handle it? They seem to be doing a good job right now. In fact, one of the things that actually pisses me off is, this model that we talked about uses volatility. Now, RBI has been containing volatility. So I'm getting wrong signals from that, right? We're still doing well, but I don't know how to get around that. So we're working on it.
We've seen that the broad consensus seems to be that India's current account deficit, so it would reduce in the next financial year. Given that commodity prices are well off the highs that we had seen right after the Ukraine war. So would that place the rupee favorably amongst its emerging market peers?
Well, obviously, we are a big commodity importer. A lot of the other emerging markets are exporters, although a lot are importers as well. So I don't know compared to other emerging market peers, but that should give a little relief to RBI as they ride their wild horse.
So last year, so we had seen that in July, the RBI had announced certain steps for further internationalization of the rupee. There's been a lot of global debate about the de-dollarization theme. So by when do you think that we could see a meaningful internationalization of the rupee, so to speak?
I think it's going to be a long time. I mean, basically, we're using it for trade in a few sort of narrow channels is all very well. But I mean, the bulk of our trade is in dollars, euros, yen, Now, that change is going to take a long, long time. Our markets need to be much more liquid, And it's important. I'm not sure how critical it is. We've got a lot, but I will say one thing, though, having said that, this whole more exciting than the internationalization has been that this UPI thing with Singapore. Yeah. Now that's really India's strength. So that would be great if we can really get hooked into using our systems for cross-border flows, right? Banks won't like it, but hey, they've been fat over the years, basically on that, So I think that is one good thing, and that should make basically everybody more efficient.
That's all in this week's episode of The Banking Show. Thank you very much for taking the time out for us, Mr. Mecklai.
You're welcome. Good luck. Yeah, bye.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.